Oil is one of the fastest moving commodity items out there. I'm putting my next guest under the microscope to get his market outlook. Kenny Can of CMC Markets, welcome to Dukascopy TV. Firstly, Kenny, you commented last week that US commercial crude inventories had created downward pressure on WTI prices. While we know that this figure can have a more short-term transient effect, what are the present longer-term drivers?
Well, in the longer-term perspective, the general global recovery prospect still remains with the U.S. tapering has started and the investor kind of price in the likelihood of a consistent pace of asset reductions, which we have seen the WTI prices have gone up quite a fair bit from the early January to the early of March this year. So that prospect of a steady global recovery remain unchanged. However, in the short term, U.S. crude inventories continue to add volatility to the price actions, as well as the standoff between Ukraine and Russia could have poised more price fluctuations for WTI in the very near term.
You mentioned there Ukraine and Russia, and Forbes has noted that the Ukraine crisis is in fact helping to bolster the US oil and gas boom. Can you expand on this theory?
Well, for the U.S., with the development of fracking technologies to exploit shale oil potentials, which has very much increased the production of oil in the U.S., this means the industry is as solid and healthy in the States. For some time to come, there will be growing pressures to start exporting U.S. crude oil to compete with the Russians. So in theory, people would rather do business with U.S. In view that there are probable sanctions put against Russia as Russia had invaded Ukraine for now.
CEO of Italian oil and gas company Eni, Paolo Scaroni, has commented that oil prices are likely to fall to around $90 a barrel. Is this a prediction you would agree with? What are your forecasts?
In my personal opinion, we saw that the market could have the likelihood to return to $90 as it had traded there in the end of November last year, and it definitely doesn't out of the questions. But obviously there will be key support to look at after the oil prices, as what we've seen here, referring to WTI US crude that has touched a high of above 105 in last week, and it has built up some support around the region of $100 as coincide with its average prices for the past 200 days. So it is a crucial turning point where market could go higher or lower if the prospect of what we discussed earlier about the steady global recovery remain, and with the tensions between Ukraine and Russia being kept, oil may have a short push against the previous high of which we've seen last September of 110. So I would say at this moment, the oil prices hovering around 101.50 is a crucial area where the WTI having a little bit consolidations before it shows a clear sign of which direction to go.
Mr. Scaroni has also commented that his firm would remain profitable even if prices fell back to $45 per barrel. Is this indicative of overvaluation in the oil market? What are the benefits of a long-term bear trend?
His comment can be taken as with a pinch of salt, whereas it may not necessarily mean a start of a bearish trend as of now. It more pointed out to the fact that how he's run his company in a robust manner of his operations, which is very good. Of course, in the long term, if in a longer term, WTI as well as the broader oil market would lock into a further bearish trend, the cost of doing business as well as the overall business operating cost would be lower. That would benefit many industry and businesses. However, I personally do not see prices to fall back to $45 per barrel. To sum it up, his comment may not necessarily signal a start of a bearish trend just yet.
Kenny Can there of CMC Markets. Kenny, thank you so much. Viewers, that's all from me for now. Goodbye.